All right, the first of two debates kicking off today. That's weird because you have the first of a two-day Fed meeting at the same time. Whatever shall we do? A lot of things going on. Watching the candidates and how they take advantage of this situation is going to be very important, and the money that comes with it. And they all have various ideas how they'll pay for their very generous spending plans. Charlie Gasparino has been dissecting a lot of that.
Particularly Kamala Harris is paying for Medicare-for-all, which is being paid for a tax on Wall Street. And I've been speaking with traders and investors over the last couple of days as this thing has taken shape. And I'll tell you, a tweet I put out yesterday really touched a nerve because when you really come down to it, you have to, forget about whether you like Kamala Harris or dislike her, but let's look at her tax plan. It is essentially a transaction tax. It is not saying J.P. Morgan, Bank of America, Goldman Sachs, you pay more money. It is taxing individuals who trade.
Buying or selling.
Yeah. Who are those individuals who trade? Well, there are a lot of retirees who trade. There are some average people who trade. There are pension funds who trade, right? Pension funds who invest the savings of teachers, the retirement savings of teachers and firemen and cops. There are mutual funds that trade, okay? Average people, my mother-in-law out in Queens owns a mutual fund. Trust me, she's not rich, okay?
Well, you're cheap. You don't help her out.
Yes, I do.
Okay, good.
High-frequency traders do trade a lot, and maybe, but
these numbers,
but you can't
she says are small. So what are you whining at?
You can't make your bones on just HFT, high-frequency trade. So the real issue here is whether this is a tax on Wall Street or a tax on like a phantom tax on the individual. And I would say, listen, just because you're in a mutual fund doesn't mean you don't pay expenses.
Right.
If they market, I think they're called 10b5 charges, you pay for those charges.
Well, small as these percentage are, they add up. So is it your sense, the people you talk to beyond Wall Street, that it's going to be prohibitive, that investors who were pre-inclined to sell a stock, buy a stock, mutual funds,
here's the impact.
Will think twice? Here's
the impact. It could dry up liquidity.
Okay.
Force trading into dark pools overseas, whatever, where you can hide the trades. It is going to have an impact on the average investor because that investor will, in some ways, pay for this. It is, and here's the other thing, which most people, which it's kind of burying the lead here. No one knows how much money you're getting out of this. This is
what worries me. It starts out small, 10% will just sort of like the value-added tax in Europe. Start out small
until you figure out you can't pay for this Medicare-for-all for this, which is a whole other story. Whether we should have Medicare-for-all, which is, I'm just saying that this is a slippery.
Well, she's going to come around.
Is he doing it too?
It could be. Yeah, he has a variation of this. But their argument is it's pennies on the dollar, not even, and there's Charlie Gasparino to say it's more onerous. You're going to say?
Great. Sell that to the American people. And by the way, when the stock market goes down 5,000 points because liquidity is starting to dry up, people aren't trading.
You think that this would do that?
It could.
Really?
Well, I mean, listen, the markets go down based on lots of reasons, including corporate earnings at the top of the list. If they're good, they'll keep going up, but the market will be lower, at some degree because of this. They will be lower than it should have been, because of this, because this is a tax on trading and liquidity, and markets perform best when there's liquidity. When you can, anytime you want to sell your stock, your IBM stock, there's someone going to buy it. It's going to buy it at a reasonable price. It's not going to be bought with massive spreads where there's trading commissions, and this sort of stuff impedes that. And here's the other thing. I don't think she can get enough money from this.
It seems so small, but again, if you're dealing in the trillions of transactions over the course of maybe, I don't know.
Well, Southern people won't trade.
All right.
Listen, when was the last time you taxed something that they do more of it? I remember the tobacco taxes, right? Remember those bonds were based on tobacco taxes?
And eventually people just stopped buying tobacco products.
The bonds went into default
because
of that.
Fair enough.